Imagine standing at the edge of opportunity, looking down at a skyline that tells a story of power, wealth, and ambition. Now imagine that in the quiet of that city, a single penthouse, a full floor in one of Chicago's most iconic towers, has just changed hands. Not through headlines, not through spectacle, but through precision, strategy, and sheer conviction. This isn't just a real estate deal. This is a move that signals where the world's most sophisticated capital is going next. And it's about to rewrite the rules of Chicago luxury forever. Stay with me, because what you're about to hear will change how you see wealth, strategy, and opportunity in a city that never sleeps. When a single property changes hands at the very top of the market, it's easy to dismiss it as gossip for the wealthy. That would be a mistake. What we are really witnessing here is a signal about confidence, timing, and the quiet recalibration of value in one of America's most important cities. A full-floor residence in Chicago's Gold Coast, perched high above Walton Street, has moved from one billionaire's balance sheet to another's. Not loudly, not with spectacle, but with precision. This wasn't a casual purchase. This was a deliberate allocation of capital into a city that many have underestimated, and into a market that rewards patience over panic. The Gold Coast has always been about scarcity, limited land, irreplaceable views, architectural permanence. You don't buy there for short-term headlines. You buy there because you understand that true luxury isn't built overnight, and it doesn't need to advertise itself. The transaction itself tells a disciplined story. The unit, a raw full-floor space, traded at a price that reflects today's reality, not yesterday's exuberance. That matters, because sophisticated buyers don't anchor to old numbers, they anchor to future potential. They ask one question: what does this asset become over the next decade? In this case, the answer is clear: a bespoke residence, engineered from the inside out, designed to reflect control, privacy, and permanence. That kind of outcome doesn't come from impulse, it comes from conviction. Chicago, despite the noise surrounding it, continues to attract serious capital at the highest levels. Why? Because markets don't run on emotion forever. They run on fundamentals: infrastructure, talent, geography, history. The Gold Coast sits at the intersection of all four. And when a buyer steps in quietly through a trust and immediately follows with permits for a multi-million-dollar build-out, that's not speculation, that's commitment. There's also a broader lesson here about how power moves. At the top, decisions aren't made to impress. They're made to endure. This purchase reflects an understanding that real estate at its best is not a trophy, it's a platform, a place to think, to operate, to host, to retreat. And those platforms are becoming more valuable, not less, in a world where volatility is the norm. So when you hear about a single condo sale in an elite tower, don't reduce it to square footage and price per foot. Look at what it represents: capital flowing toward quality, confidence expressed through action, not words, and a reminder that in every market cycle, the most important moves are often the quiet ones, made by people who see beyond the present moment and position themselves for what comes next. At the center of this story is not a headline, but a profile, the kind of profile that only emerges after decades of disciplined execution. This buyer didn't arrive here by momentum or luck. He comes from a business that understands scale, margins, and endurance. A company built quietly, family-led, operationally obsessive, and deeply embedded in global supply chains that most people never think about until they break. That background matters because it shapes how capital is deployed when liquidity events occur. When years of private value suddenly become visible and mobile, the real question is not how much money is made, but how that money is positioned next. Sophisticated wealth does not chase novelty, it seeks ballast. It looks for assets that stabilize a balance sheet while reinforcing long-term optionality. That is why this purchase stands out. It reflects a mindset trained to think in decades, not quarters. The medical supply business is unforgiving. Margins are earned through efficiency, trust is earned through reliability, and leadership is tested in moments of crisis. Anyone who has navigated that environment understands risk differently. They don't confuse volatility with danger, and they don't confuse familiarity with safety. They allocate capital with the same rigor they apply to operations, selectively, deliberately, and with an eye toward resilience. That perspective carries directly into real estate at the top tier. A full-floor residence in a landmark tower is not about lifestyle alone. It's about control. Control of space, control of privacy, control of time. For individuals operating at this level, those are not luxuries. They are requirements. The ability to step away from noise, to host on your own terms, to exist above the chaos of daily markets. That has tangible value. What's especially telling is the decision to invest further after the purchase. Filing permits for a multi-million-dollar interior build-out is not a cosmetic upgrade. It is a declaration of intent. It says this asset is not temporary. It will be shaped, optimized, and held to a personal standard. That mirrors how enduring companies are built, not acquired or appearance, but developed for performance. There's also a strategic humility embedded here. Despite enormous wealth, the move was quiet. No branding, no announcement, no spectacle. At the highest levels, discretion is not secrecy, it's efficiency. It allows focus, it avoids distortion, and it ensures that decisions are made for the right reasons, not public validation. This is what modern industrial wealth looks like when it intersects with urban capital markets. Not flashy, not impulsive, grounded in systems, governance, and long-term thinking. It reflects a belief that certain cities, certain locations, and certain assets continue to matter, even when narratives say otherwise. In the end, this isn't just about who bought what. It's about how leaders who have built real businesses think about permanence. They don't ask whether something is fashionable. They ask whether it will still function, still matter, still deliver value when cycles turn. And when they answer yes, they move calmly, confidently, and without apology. What makes this moment truly instructive is not the transaction itself, but the price at which it occurred. Markets, especially at the high end, have memories. They remember peak valuations. They remember exuberance. And too often, participants anchor themselves to yesterday's numbers instead of today's realities. The disciplined players don't do that. They understand that price is not history. Price is a forward-looking assessment of risk and opportunity. This residence once carried a much higher valuation, set during a period when capital was abundant, rates were low, and optimism was priced in as certainty. That era rewarded momentum. This one rewards judgment. The fact that this asset changed hands at a meaningful discount is not a sign of weakness, it's evidence of a market recalibrating. And recalibration is where opportunity lives. Luxury real estate is often misunderstood. People assume it's immune to cycles. It's not. It's simply governed by different ones. Liquidity matters. Carrying costs matter. Time matters. When those forces converge, even the most prestigious assets must reprice to meet reality. The mistake is assuming that repricing equals decline. In truth, it often marks the beginning of the next accumulation phase. Sophisticated buyers wait for this moment. They don't rush to defend old valuations, and they don't fear volatility. They recognize that value emerges when conviction meets patience. Acquiring a premier asset below its historical peak is not about bargain hunting. It's about margin of safety. It's about entering a position with room to invest, improve, and compound. And improvement is the key word here. Buying at a lower basis creates flexibility. It allows capital to be deployed where it actually matters, into customization, quality, and long-term usability. A multi-million-dollar build-out following the purchase isn't excess, it's optimization. It transforms a static asset into a tailored instrument, aligned with how the owner lives and operates. That's how value is created at the top end, not by flipping, but by refining. There's also a broader signal embedded in this pricing dynamic. It tells us that even in elite markets, leverage and sentiment no longer dictate outcomes. Fundamentals are reasserting themselves. Buyers are selective. Sellers are pragmatic. And transactions happen when both sides accept the present rather than argue with the past. That's a healthy market, even if it makes some people uncomfortable. Chicago's luxury segment is a case study in this shift. The city hasn't lost its intrinsic advantages, its architecture, its cultural gravity, its access to talent and capital. What it has lost is speculative froth. And for long-term investors, that's not a problem. That's an invitation. The lesson here is simple, but often ignored. Great assets don't disappear when prices correct. They become available to those who are prepared. Those who understand cycles don't ask why something is cheaper than it was before. They ask whether the underlying value remains intact. When it does, they act decisively, quietly, and with a long horizon. In markets like these, discipline replaces drama. Strategy replaces emotion, and the winners are not the loudest voices, but the calm ones who know that the best entry points rarely feel comfortable in the moment. What's unfolding here is part of a much larger pattern, one that separates surface level narratives from what capital is actually doing. Cities, like markets, go through reputational cycles. They're praised, then questioned, then written off, often long before the fundamentals truly change. The mistake many observers make is confusing headlines with reality. Serious capital doesn't do that. It watches behavior, not commentary. Chicago has been declared challenged more times than anyone can count. And yet, when you track where high-conviction money quietly settles, the picture looks very different. Iconic buildings continue to trade, prime locations remain scarce, and ownership transitions occur not because confidence has vanished, but because it's becoming more selective. That distinction matters. This transaction fits squarely into that reality. It didn't happen in a fringe neighborhood or a speculative development. It happened in the Gold Coast, a district defined by permanence. You can't manufacture that. You can't replicate it. Lake access, established density, historic prestige, these are non-renewable assets. And when markets reset, non-renewable assets are the first to regain relevance. What we're seeing is not an exodus, but a reshuffling. Some owners reduce exposure, others step in with longer horizons and stronger balance sheets. That's how mature markets evolve. The noise creates the illusion of decline, while underneath, ownership consolidates into fewer, more patient hands. This is not a retreat from the city, it's a vote for its core. There's also an important psychological element at play. Buying into a city when sentiment is mixed requires conviction. It requires the ability to separate political cycles from economic ones and temporary challenges from structural strengths. Chicago still sits at the center of American commerce. It still produces talent. It still anchors logistics, finance, healthcare, and manufacturing. Those engines don't shut down because of a news cycle. High-end real estate reflects that reality with a lag. It's not driven by monthly data points. It's driven by long-term belief in place. When a buyer commits not only to purchase, but to invest millions more into a personalized build-out, that's a signal of belief. Belief that the city will remain relevant, functional, and desirable over time. This is how confidence expresses itself at the top. Not through speeches, not through press releases, through permits, contractors, and capital expenditures, through decisions that are expensive to reverse. That's the difference between commentary and commitment. And here's the uncomfortable truth for skeptics. Cities don't need unanimous approval to thrive. They need a critical mass of people who understand their advantages and are willing to invest through uncertainty. History shows this again and again. New York in the 1970s, London in the early 1990s. Every great city has been doubted right before it proved resilient. So when you see a quiet, high-value transaction in one of Chicago's don't frame established towers, don't frame it as nostalgia or stubbornness, frame it as pattern recognition, capital moving toward density, quality, and irreplaceability, exactly where it has always gone when sentiment wavers and fundamentals endure. In the end, markets reward those who distinguish between temporary discomfort and permanent decline. This move suggests a clear answer to that question, and it's one grounded in experience, not emotion. What this purchase ultimately illustrates is how true leaders and sophisticated investors think about opportunity, control, and long-term positioning. At this level, decisions are never made in isolation or based on sentiment alone. They are the product of a disciplined evaluation of multiple factors: location, liquidity, timing, optionality, and the ability to shape the asset to your own specifications. This transaction reflects all of that in action. Ownership at this tier is not about display. It's about utility. It's about having an environment that supports decision-making, privacy, and strategic thinking. A raw full-floor residence in a landmark tower represents flexibility and potential, a blank canvas that can be tailored to operational needs, lifestyle priorities, and personal taste. The choice to acquire and immediately pursue a significant build-out signals a forward-looking mindset. It's an assertion that the asset will not remain static. It will be transformed into a tool optimized for both efficiency and long-term value. What's particularly noteworthy is the patience and selectivity demonstrated. Wealth at this scale is mobile. Capital can go anywhere in the world in a matter of days. Yet the decision to commit significant resources to this specific property indicates a belief in the fundamentals of the city and the unique value of the location. It is a recognition that scarcity matters. Not all assets are fungible, and some will always command attention because they cannot be replicated. There's also a strategic dimension that often goes unseen. High net worth individuals operate with an acute awareness of cycles, sentiment, and price distortions. They understand that markets fluctuate and that opportunities often emerge when others hesitate. Acquiring a prime asset at a meaningful discount is not opportunism in a speculative sense. It is disciplined capital allocation. It is about positioning oneself where others have overextended and where long-term appreciation and optionality are highest. This mindset extends beyond financial calculation. It's about control, controlling the timing, the structure, the design, and ultimately the value of a property allows for leverage in ways that go far beyond simple ownership. It's the same principle applied to business. Know your inputs, manage risk, and position yourself to extract maximum advantage when conditions align. Real estate at the top tier is no different. Finally, this move communicates something subtle but powerful: confidence. As not shouted, it is demonstrated. High-stakes decisions at this level are executed with precision, discretion, and foresight. Public opinion is irrelevant. The measure of success is whether the asset will serve its owner effectively over the long horizon, not whether it makes headlines today. In the end, this purchase embodies principles that underlie enduring success: patience, strategic clarity, operational control, and long-term vision. It reminds us that true opportunity is rarely obvious and that capital deployed with discipline, insight, and foresight often outperforms both impulsive moves and conventional thinking. Decisions like this are not just transactions. They are statements about understanding risk, recognizing value, and positioning oneself to benefit from the interplay of time, scarcity, and strategy. This is how the most sophisticated investors operate: quietly, strategically, decisively, and ultimately successfully. So here's the truth. This isn't just a condo sale. This is a masterclass in strategy, vision, and timing. It's a statement that the bold, the patient, and the decisive always find opportunity where others see risk. Chicago's skyline isn't just buildings. It's a battlefield of capital, ambition, and foresight. And today, one investor just reminded the world how it's done. Remember this: the real winners don't chase headlines. They make moves that echo for years. They act quietly, strategically, and with absolute conviction. And in that silence, they reshape markets, redefine value, and command their legacy. So the next time you look at opportunity, ask yourself, will you wait for it to pass, or will you step in, act with precision, and own your moment? Because fortune doesn't wait, and neither should you.